You know what's playing out behind the numbers here. What do you make of this development?
I think, to my mind, we've expected this before now. At the beginning of the year, we had forecasted that we'll probably close the year at single digits, and we expected the base effect to impact as we get to May, June. Okay. So it's not surprising that we're at 12.48. As a matter of fact, we expect that by May into June, we should be somewhere around 10%. So when the numbers came in, the market had expected that, and so it wasn't a surprise.
Interesting. So, Uche, why do you think we should begin to position ourselves now? I mean, looking at this, I have a feeling that the next NPR is not going to be the normal narrative of hold. I have a feeling something might happen. You know, that's what I'm expecting, the Austin inflation at 12.4. But what do you think? How do you think the MPC is going to react to this?
I think they may hold. Interestingly, I think they may hold. Now, the reasons are inflation numbers are 12.48, but the target is somewhere around single digit and 10%. Yes. And don't forget that analysts have said, and the market basically expects that when the election spending numbers happen in Q3, I think it might not be prudent for the MPC to tinker with MPR at this stage, and perhaps will come to July or September, and then there's need to deal with that. I think what the central bank may do, or the MPC as a body, is to look for some unorthodox measures to deal with the interest rate levels. And we saw it happen in March, where a week after the MPC meeting, we had rates. CBN just came in and held the brakes with OMO auction, and the market just readjusted and rates trended lower. So I don't expect the MPC, I don't envisage the MPC changing its decision in May, but I expect that by July or September, we should see some moderations around the numbers.
Talking about those moderations, do you see this 12.4 going back to, say, like a 13 with the, with election spending?
I think we will still get lower.
Okay.
11, maybe 10 numbers.
You think? There'll be lots of money in circulation at that period.
I think for now, don't forget is base effect, so you probably have up until June. And then the June inflation numbers will come out second week or perhaps third week in July, right? Yeah. So we'll probably still slow down a bit in terms of inflation numbers, but I expect some tick up towards September, October, and down November. So to a large extent, to say if we get to 13, depending on how low we get to, by June, we'll actually determine how far we'll get there and how much of injection we're going to get in terms of spending. Because don't forget, the times are different. Where we're coming from and where we are right now are two different times. So I don't expect we might get the level of flows that we had in terms of spending in the previous years. But I think to a large extent, there will be spendings. So the numbers we may get to, I can't tell from now, but I don't think it's enough to cause worry in terms of where we are coming from. Around the 18 levels, 17 levels now. I don't think we'll get to that.
Talking about enough to cause worry, I can see food price, index there at 14.8%.
Yeah,
what do you make of it?
That's high, no doubt about that, and should moderate lower. But again, if you put things side by side, where were we a year ago?
Okay.
That was not an election year. But of course, we had the full impact of the global financial crisis with respect to, and as well as oil and the crude oil prices and all of that. But the market is ticking up.
It would be a relief to actually see that number come down, talking about the food price inflation.
I expect it to come down.
It will be a relief to see that come down.
I expect it to come down.
An update on the fixed income space?
Wow. I think the market has been quite interesting. And within the last couple of days, I would say we've seen rates skyrocket, if I'll use the word skyrocket, yes. We've had a very quiet market, or the market has been around the 10, 11%. And then CBN did the last OMO auction, which technically mopped up the whole liquidity in the market. And then rates moved up to 13, almost close to the upper 14 levels. But and I think what drove that number was the retail auction, the OMO of Thursday, the retail auction of Friday, and the wholesale yesterday. And you had overnight rates get to as high as 250%. The last we saw of that was maybe 4 weeks ago, 5 weeks ago. So it was interesting how we had a very quiet market for 3 weeks, and then CBN just did the last one. I think one other thing that made the difference was in the last couple of weeks, CBN will always come in and prorate. At the last home auction, they mopped up the whole thing. And I think that sent a significant signal into the market. And it actually changed dynamics. But at the end of trading today, we had a more subdued market. People came in to profit at some point, And then you had some buying sentiment, especially for the T-bills and the bonds. We are down around 12.7, 12.8% today from a 13.4, 13.5 yesterday. So I think the market
It's a Tuesday. Friday's far away. Never know what's going to happen between now and Tuesday. Thank you so much. Uche Ugboh there, Head of Assets and Liability Management at Diamond Bank.